Welcome back to Explain the Charts. Today, June 19th, 2025, we're taking a look at SPY, the S&P 500 ETF, covering both the latest news and in-depth chart analysis. The Fed held rates steady yesterday, but forecast 2 cuts in 2025, while also projecting higher inflation and lower growth. Let's see how this plays out on the charts. Let's start with the daily chart. Looking back to early February 2024, we see a generally upward trend, with some pullbacks along the way. The most recent candles show some sideways action. Now, let's dive into the 1-hour chart for a closer look at recent price action. Zooming in on the past few days, we see a bit more volatility, which could be a reaction to the Fed news. There's some choppiness here, suggesting indecision in the market. We'll want to watch for a clear break above or below recent resistance and support. Let's drill down to the 15-minute chart to see how the market's been behaving today. The 15-minute shows more detail into intraday price movement. We can see a consolidation pattern forming and is bouncing between 602 and 596. A break of either will signal the price direction soon. Looking at the one-day chart, a critical level to watch is around 580, which has acted as support in the past. On the upside, the previous all-time high near 615 could act as resistance. Based on the news and charts, it's hard to say with high certainty where the SPY is headed. I'd give a 60% probability to a continued uptrend towards previous all-time highs, assuming the inflation picture clears up. Otherwise, a drop to 580 is likely. In summary, keep an eye on these price levels, support around 580 and resistance near 615. Watch for volume confirmation on any breakouts or breakdowns. Also, stay tuned for further economic data releases, as these could heavily influence the Fed's next moves and, consequently, the direction of the S&P 500. This has been Explain the Charts. Thanks for watching.